Welcome to Financial Management, a program of CalTAP presented by Swords to Plowshares. We'll be going over key issues in financial management: budgeting, loans and financing, building your credit, buying a home. There are a lot more documents that are attached to this module on the CalTAP website. Some of this information can get more detailed. So once you decide which issues you're interested in or need to know more about, you'll not only find a lot more information, you'll also find links to tools and resources, to calculators and apps, and other things that can really help you as you work on your financial management. First, some tips. Identify and write down your financial goals. Use SMART goals. Make sure that they are doable, they are within reach. Make sure that you have timelines on them so you can meet those timelines and then reevaluate and also be able to assess how you did. Keep accurate records of your bills and other financial obligations. Ensure that all of those records are kept safe and in a secure location. And keep tax records from the last 3 years. So step 1 is creating a budget. First, create a list of all sources of income and expenses. Don't forget that your income may be more than just a check from your employer. You might have disability income from the VA, loans, scholarships for school purposes, and other sources of income. Also look at all of your expenses, your rent, your credit card payments, your loan payments, your car payment, etc., and so forth. Gather all of your financial statements, bank statements, credit statements, loan statements, school loan statements, all in one place. Calendar your bills and your paydays. Put it on a physical calendar. You can also put it on your computer calendar, on your phone calendar. Sit back and look at it. Let it sink in when your paydays are, when your bills are due. In some cases, you can change your bill due dates. Some lenders will allow you to do that. So you can look at that, make sure it all makes sense. Make sure that you balance your cash flow so that you're all right until the next payday comes along. And most of all, make sure that you never pay bills late, because that can really, really impact your credit report. Break your expenses into 2 categories, fixed and variable. Fixed, they stay the same every month. Rent, car payment, things like that. Variable, they change monthly. Groceries. What you want to reach is the 50-30-20 budget. We're going to talk later about exactly what that is, but I want to say now that it might not be possible today. This is your goal. You want to reach it as soon as you can, but don't beat yourself up if you can't do it today. Once you have your budget and your plan, track your progress daily, weekly, or monthly, and revisit your budget to adjust your needs as they change over time, and they will change over time. Your goals are going to change over time, your income will change over time, your rent and other expenses will change over time. So, the 50-30-20 budget. So let's talk about what exactly this 50-30-20 budget is. 50% of after-tax income should be spent on things you need, such as housing and food. 30% of after-tax income should be spent on things you want, such as shopping and dining out. And 20% of after-tax income should be spent on savings and debt repayment. When we look at these boxes, 50% on things you need. You need housing, you need food. But you have wiggle room in there about what kind of housing, what kind of food. You might want to get a roommate. You might want to get a smaller apartment, a bigger apartment, if you need it for your family. Your 20% on savings and debt repayment, think of this as sacrosanct. Really, really try and hit this goal. Having those savings and the gratification of repaying a debt is going to give you a feeling of stability, freedom of opportunity, and it's going to pull a lot of stress off of you in the future. So make sure you do that. That's your future right there. Now the 30%, obviously, you don't have to spend 30% of your income on things you want. You may. You also think about whether or not you want to shift some of that 30% into your need column or into your debt repayment and savings column at any given time. So all in all, we talked about making a budget. We talked about making sure you keep track of it. Again, if you look at the documents, there's more information, there's tips and tricks on this, and there's also a lot of apps that are really handy to help you with this so that you don't have to track every little detail and every little penny. All right, loans and financing. Secured loans and unsecured loans. So secured loans, that's a loan for a house, there's a thing. Loan for a car, there's a thing. Unsecured are like credit card loans where you're buying something and you're promising to pay them back for it. Now, credit. Your credit information has a huge impact on your ability to get jobs, to get housing, to get insurance. It has a huge impact on your life, and you want to make sure that you have good credit. Again, this is going to make you feel better. It's going to take stress off of you. It's going to give you that freedom of opportunity throughout your life. So each year you're eligible to see a free credit report. You can go to annualcreditreport.com. This is the only website supported by the federal government for the free annual credit reports. So this is the one that you want to go to. Be wary of ones that say like free report in their name and it's really an advertising and they want to pull you in. It's annualcreditreport.com, and you'll see these links in the documents attached to this module. So your credit score. You can look at your credit report once a year. You're going to have a credit score that comes between around 579 or less up to 800. 800 is great. You're an exceptional borrower. Lenders are happy to lend you money. 579, you're a very risky borrower. You're not going to get that loan. So this is a really important number, and you want to understand how they calculate your credit score. They're going to look at all sorts of credit that you have: student loans, car loans, credit cards, personal loans, mortgages, home equity, etc. They're going to look at your payment history, extremely important. Do you pay on time, consistently, in the full amount? That's why you want to have those dates on your calendar. Make sure you never, ever miss a payment. They're going to look at the length of your credit history. The longer, the better, really. It helps your credit score because there's more to look at, and you've gotten more time to either demonstrate what a great credit risk you are, or if you've had some problems in the past, you've had time to rebuild that credit and fix it. Never think it's too late to fix your credit. Credit inquiries. This reflects how many institutions have looked at your credit history, and they're going to be doing this if you're applying for a lot of credit cards. So if you're applying for a lot of credit cards, that raises a red flag, and it can impact your score. They're also just going to look at the account mix. Is it consumer debt, or is it things like education or a home? Are you maxed out? And those issues. What you want to be is a low risk. You want to pay your bills on time, and you want to pay them in full. And you don't want to overextend yourself. Late payments. May seem like it's not that big of a deal. You were a week late on your utility bill. These stay on your credit history for 7 years. So just make sure you pay them on time. And of course, there are serious consequences to your credit score and finances if your loan becomes delinquent or if you default on a loan. I want to mention that some of these credit bureaus, they make mistakes just like everyone else. The number one complaint posted to the Consumer Financial Protection Bureau's website was mistakes on people's credit reports. Look at it carefully. It's going to list out all the loans you have, all of the debt you have. It's also going to have name, address, social security number, date of birth, employment history, other things. Look at it carefully and make sure it's correct. If it isn't correct, tell the credit reporting company in writing what information you think is inaccurate. Tell the information provider in writing that you dispute an item on your credit report. The agency has 30 days to investigate the information, and the information must be removed from a file if the credit reporting agency cannot verify it or correct the errors. So make sure that you take care of it in writing, and you also want to report it to the Consumer Financial Protection Bureau. Financial assistance. We all need it sometimes. And there are a number of programs out there, particularly for veterans, for reserve, for military officers, etc., that can help. And you should reach out for help in the near term, because it's much better to pay back a little bit of money or to get out of a little bit of a hole than to just spiral down. It's just going to get harder and harder. First, I'm going to talk about the Supportive Services for Veterans and Families program. This is resources that come from the VA. They're administered by community-based organizations all over California in every county of California. They're focused on rapid rehousing and eviction prevention. So that means that if you are having trouble coming up with enough money to put down a deposit or first and last rent, they can help you with that. They can also help if you get in arrears on your rent or housing associated expenses. And when you do that, you fix it quickly, and then you put together a plan so that you're not going to get into that situation again. We also have the California Military Family Relief Fund for California National Guard members, Military Officers Association of America, Reserve Aid, Thanks USA Scholarship Program, and the VFW. If you look at the materials that are attached to this program, you'll find much more information about all of these programs, what the eligibility requirements are, and of course links to the website so you can just go there and find out directly from them. Steps to buying a home. This is the big one. As a veteran, there are programs to help you buy a house. First step is to decide, are you ready to buy a house? Do you have enough income? Do you have steady income? Do you want to stay where you are? A lot of people, when they separate, they might bounce around a little bit. So you might want to defer buying a house down the road a little bit. You're also going to have other expenses on top of mortgages. You're going to have property taxes, repairs, condo fees, other expenses. On the bright side, you're going to save money on your taxes, and you're going to be building equity and building wealth, and you're going to be able to pass that house on to your children or to anyone else you choose to pass it on to. So once you decide you're really interested, you want to buy that house, determine how much of a mortgage that you can afford. Pre-qualification is an informal way to find out how much money you can borrow. And doing this process, you're not making any commitment. You're just telling the lender your income, down payment information, outstanding debts. There's no paperwork necessary. There's no obligation. It's just getting an estimate of where you stand, what you can really do. Now, obtaining pre-approval, they're going to require a lot more information from you. The lender is going to provide you with a loan estimate. You're going to provide pay stubs, W-2 forms, tax returns, information about assets and long-term debts, bank account information, and other information so that they can really establish whether or not you are approved. And if they do approve you, then they've made a commitment to lend you that money. They're going to look at your debt-to-income ratio, your monthly expenses compared to your monthly gross income. What's coming in and what's going out? And is there a healthy ratio? Do you have the income to actually pay for this mortgage and cover your other expenses? So you're shopping around for a house. You want to make an offer. You want the seller to accept. And you're going to determine which mortgage option is best for you. Now this includes the structure of the loan. Is it an interest-only mortgage payment that you're going to pay for a fixed period of time and then your costs are going to go way up? Also, you're going to determine if this is the organization you want to accept the loan from. Shop around, compare, negotiate. Contact several lenders on the same day to compare quotes. And make sure that your loan provider, your lender or broker, gives you a loan estimate within 3 business days of getting your application. They must give it to you or mail it to you. Now, this loan estimate should include everything about the loan and what it really entails for you to pay it back, so that you don't experience payment shock and you don't understand what you're getting into. Are you going to qualify for a loan to purchase that home? Again, they're going to look at that debt to income ratio. Now, even if your DTI, or debt to income ratio, is not ideal, you may still qualify if you can show that you promptly pay more in rent than you would under the mortgage. If you have a good credit history, if you make a larger down payment, if you have cash reserves such as savings. So going all the way back to the beginning when we talked about budgeting and talked about that 20%, this is where that savings is going to give you the freedom of opportunity and the confidence to go after your dreams. And your dream might be a home. Going through settlement, that's the end, that's the closing. There's going to be a lot of documents and questions that you have to answer from the lender. You're going to schedule a home inspection, make sure that the building itself is sound. And if it isn't, that you renegotiate the price, or if the seller has to do the repairs before you purchase, make sure that's all settled. Have homeowners insurance, shop for title insurance and closing services, and close the deal. And then you're going to want to save and file those documents in a very safe place. Now, financing, coming up with that down payment. There are a number of programs that can help people. Home buyer assistance programs are not limited to veterans. Counties and localities often have them, and they're for lower income individuals to help you be able to get into that first home. And then, of course, as a veteran, you have access to the VA home loans and the CalVet home loans. You cannot use those 2 home loans simultaneously, so look at each of them and balance out what's best for you. Again, there's a lot more information about the CalVet home loans on the CalTAP curriculum. If you look at the California benefits and all of the information there, you'll find out a lot more about those next steps that you can take. I'll also say that once you buy a home, of course, you can tap into that equity, but you want to be careful. You don't want to overextend yourself, but when the time is right, sometimes you can do that and you can get a lower interest rate, or you can borrow against the equity that you have in that house in order to do other things that you'd like to do with your funds. If you're having trouble making your mortgage payments, address it quickly. You can renegotiate with your lender. You can get help from a trained housing counselor who can help you for no charge or a small fee. But you don't want it to just build up and build up, and there are resources to help you. So Neighborhood Works America, you can give them a call at 1-888-995-HOPE, 4673, or go to their website, www.nw.org. Now again, when it comes to money, you want to be cautious. You want to be cautious of rent-to-own and payday loans. Payday loans are terrible. They charge exorbitant fees, and you'll end up in a money pit just rolling over debt and debt and debt. Predatory lenders, they've been known to come after veterans. Be careful of them. Be careful of foreclosure rescue or any kind of loan modification scams. So any kind of organization that wants money up front to avoid foreclosure, if they make unsolicited offers or have lofty advertisements saying that they could save your home and they could do everything for you, Be careful. Go to the Consumer Financial Protection Bureau's website. You can also go to the State of California Attorney General's website and make sure that you're watching out for your interests. Thank you for watching this financial management program. Again, there are lots more resources on the CalTAP website, and those include more detailed descriptions of some of these more complicated issues and many links to organizations, tools, apps, calculators, and other tools that you can use to build your wealth and manage your money.